Housing prices are facing meteoric rises all across the country, and that is making first-time buyers feel increasingly more frustrated as affordable homes have become impossible to find. The current housing buying frenzy is leading to fierce bidding wars, where most homes end up selling for hundreds of thousands or even millions of dollars above the asking price. What most potential buyers don't realize is that they don't actually stand a chance of winning these competitions and finally purchase a home, because more often than not, the battle is between average American families versus big investment funds, versus billionaires, and versus wealthy foreigners. Knowing that the market has been booming over the past year and that the epic price bubble is seen as a promise of sizable future returns, investors have been gobbling up all the homes they can find in the U.S. to either quickly flip them and put them back in the market for a huge profit, or to rent those properties at very aggressive rates. But in the meantime, millions of Americans simply can't find a place to live. The last time we've seen such a competitive market was just before the housing market crash of 2008, and there are many indicators signaling that we're going down the same path again. At this stage of the buying frenzy, housing prices and rents have nowhere else to go but up, and according to recent reports, more and more investors have been racing to capitalize on this trend. A recent estimate released by John Burns Real Estate Consulting indicates that as many as 1 in 5 houses sold in the top U.S. housing markets are being purchased by someone who has no intentions to ever move in. As a consequence, the consulting firm predicts prices will soon explode, climbing further 12% this year and at least 6% more in 2022. The firm's analysts revealed that in 2021, an unprecedented amount of investors have entered the market and started to voraciously buy homes all across the nation. You now have permanent capital competing with a young couple trying to buy a house, said company CEO John Burns. Now that's going to make U.S. housing permanently more expensive, he warned. Burns also exposed that there are more than 200 big money companies and investment firms competing with families and first-time buyers for homes, including giants of finance such as J.P. Morgan Asset Management and BlackRock Inc. Now, this means that the U.S. housing inventory is going through the process of financialization right before our eyes, but most people are completely unaware of it and do not realize how worrying this trend really is. The current supply and demand imbalances are only going to get worse with the involvement of big money investors, because they all have the means to cover virtually any offer. Those firms have been already paying much more than working Americans could ever afford for these homes, sometimes even more than the homes are worth, only adding more fuel to the housing market bubble. A recent Wall Street report highlighted that this time the price bubble is not expanding only due to a heated homebuyer demand, but mainly due to investor speculation. And if there's something we learned from the previous market bubbles, is that a major burst follows when investors overlook the risks and keep testing the market's limits. Another concerning factor of this speculative rally is that most houses purchased by these companies are not going to be sold to potential homeowners. Instead, they'll be turned into rentals, which leaves even fewer available options for those who want to own a home. In any case, with such steep price increases and titans of finance outbidding middle-class Americans for the few remaining houses still available, how are these families ever going to afford to purchase a home? In this sort of environment, if anyone still believes they'll be able to find a decent home for a reasonable price, we're sorry to say these people will likely get bitterly disappointed. Many potential homebuyers are already feeling extremely discouraged in face of these wildly competitive bidding wars. That's what Lisa Bishop, a real estate agent in Fort Walton Beach, Florida, recently noted happening in the market of a small city located on the Gulf Coast. Bishop said that investment groups have been snapping up single-family homes either to fix up and flip or to rent out for the income. She disclosed that a recent client, who was a first-time buyer, bid on 6 houses, but was outbid each time, often by cash offers. It's great for sellers, but it's very discouraging for your average buyer, Bishop added. Only in Fort Walton, investor sales surged by 65% from a year ago, according to recent statistics released by John Burns. In Flagstaff, Arizona, they're up by 54%, while in Tulsa, Oklahoma, by 41%. Nationwide, investors make up about 20% of all housing sales. At this point, entire neighborhoods are being bought by Wall Street investors, with some companies taking these purchases to an entirely new level. For example, in a frenetic bidding war that occurred during the winter, the entire new subdivision north of Houston was sold to one company called Fundrise, LLC. The construction company, D.R. Horton, Inc., built 124 houses in Conroe, Texas, rented them out, and then put the whole community, Amber Pines at Foster's Ridge, on the block. But a huge group of investors and home rental firms ran to snap up such properties, and Fundrise left the competition with the winning $32 million bid. D.R. Horton, for its part, one of the nation's biggest home builders, managed to make twice what it usually makes selling houses to the middle class, which means the trend in which building companies sell entire neighborhoods to investors is just beginning. We certainly wouldn't expect every single family community we sell to sell at a 50% gross margin, the builder's finance chief Bill Wheat said at a recent investor conference. Construction companies are in for the profits. It's evident they'll keep following the path that leads to more money. As they try to extend their profit margins as much as possible, a smaller share of their inventories will be available for families to buy. Meanwhile, Fundrise released plans to permanently rent these homes out, and the head of the company recently revealed he was able to push rent prices up and turn significant profits. Not only was the community fully leased at closing, but we've already experienced year-over-year rent growth on lease renewals of approximately 2 to 3 times industry norms for residential assets. While we expected strong rent growth when we made the investment, these numbers have exceeded our underwritten expectations. This makes us feel even more bullish on the quality of the acquisition, he said. All over the country, rent prices have been skyrocketing. And if the reason for the latest increases wasn't clear before, since renters aren't seeing any maintenance repairs that could justify the hike in prices, now that these big investment firms are taking over most of the U.S. housing inventory, renters can definitely understand why this is happening. In Minnesota, an investment firm called Haven Park Capital Partners bought 2 manufactured home communities for approximately $71 million. For almost a half-century, such communities have been owned by a local family-run enterprise that offered some of the lowest lot rents in the area. But now, residents are fearing that they won't be able to afford their rents anymore, as the communities are now aimed at returning profits for their financiers, who have aggressively expanded prices over the last year. Of course, Haven Park Capital didn't spend $71 million to keep rent prices at low levels. Now, hundreds of residents are at risk of being evicted from their homes they've lived in for decades. The same pattern is happening in a dozen other states. Some economists argue this is a modern form of feudalism in America, since millions of people are being left out of the housing market because they simply can't afford to buy a home. And apparently our population will be doomed to make painful rent payments to the wealthy for the rest of their lives. Even though real estate speculation is nothing new to American history, there's a major difference in scale and precision between the practices of local landlords and big financial institutions, which are now using residential properties as part of their speculative investment schemes. As real estate financialization is quickly growing around the U.S., local markets are getting exhausted by the soaring housing prices and facing acute affordability crises. In a recent in-depth cover story published by the New York Times Magazine on the growth of housing financialization, the author, Francesca Mari, describes that these firms total over $60 billion through the use of complex financial products like real estate investment trusts or REITs and private equity firms. In many cases, these institutions manage their housing portfolio with an eye on high returns, leading to rent hikes, maintenance cutbacks, or opaque fees for unsuspecting renters of their homes. On the same note, Edward Gutz, the director of the Center for Urban and Regional Affairs at the University of Minnesota, explained that some of these non-local institutional buyers are in it to milk properties. They tend to make purchases in the middle or lower end of the market and oftentimes will then milk those properties for whatever incomes they can get. They're collecting rents and really not reinvesting in the building, trying instead to draw profits from them, he said. In times of growing inequalities between the top 1% and the rest of society, many experts have been arguing that a housing market crash is not going to be the worst possible consequence of the ongoing crisis. In other words, although a crash will cause a devastating financial impact even before it happens, the effects of surging housing and rent costs will spark chaos across America. The biggest worry right now seems to be the fact that such disparities are inciting social tensions all across the nation. The bigger the gap between the rich and the poor, the more those at the bottom of the economic food chain resent those at the very top of the economic food chain. And as time passes by, this seems like another determinant that can fuel more turbulence and conflicts in this nation. For now, these companies are raking in the profits, but soon enough, they might realize there will be a great price to pay down the road. Thank you for watching. If you enjoyed this video, we invite you to check out Lost Prophecies of the Future of America, the latest book of the economic collapse writer Michael Snyder. Please don't forget to share your thoughts in the comments section down below, and please keep tuned for the next video.